You don't have any money sitting in the bank, and you've probably got some credit card debts and student loan debts and auto loans. You've got nothing saved for your kids' college, let alone yourself. So what's the point in trying to buy a house when you have no money? Well, I'm here to tell you, you don't need a lot of money. In fact, I'm going to share lots of real live examples today from clients that I work with every single day. I want to show you the total dollar amount of money that they bring to the closing table when they get a house with me using down payment assistance. Because it is something I do very regularly, and I feel like with these videos, there's a lot of naysayers and people think it's not something that's actually happening, that it only works for very specific scenarios. And that's just not true. Down payment assistance has so many different options, and honestly, that's what the majority of my clients are using because everybody's broke right now. I want to dive a little deeper into the actual guts of it, the actual programs. I know I've got other videos that talk about specific ones, state-specific ones, but today I just want to talk about the overall concept and look at some real numbers so that you can really decide if you've got an extra $2,000 or $1,000 or even $500. You can become a homeowner. You can buy a house with that little amount of money, especially if you've got a lease coming due soon. That's the big one right now. Summertime, everyone's leases are about to come due, and if you have to renew or move, and many times you're spending a lot of money up front, and I could probably get you into a house for that same dollar amount or less in many cases. Or maybe a little bit more. But anyway, we'll dive into it and we'll get into all the details. I've made a lot of different short form videos regarding this, but I wanted to kind of go a little bit more in depth, and comments are absolutely welcome. So this is going to be a very simple formula. This works with almost every different type of loan out there as long as it's down payment assistance. The down payment assistance programs are interchangeable. The formula is what we want to pay attention to. This is how we buy a house with very, very little money out of pocket and sometimes no money. This is how we figure it out. So let's take a look at this bad boy. We have our price of $400,000 right here. If we do an FHA loan, which the FHA loan is a great option if you've got kind of the lower to mid-level credit scores, right? So we're talking 600, 620, 640, definitely less than 700. If your score is between 600 and 700, the FHA loan 9 times out of 10 is the one that makes the most amount of sense. To live in the house as a home buyer for FHA, the minimum down payment is 3.5%. So with this example, we're going to use $400,000. A 3.5% down payment on $400,000 would be $14,000. Closing costs, that's the other one no one talks about for some reason. When you buy a house, there are closing costs. Closing costs are a combination of what the lender charges, as well as the title company, the escrow, and then there are other things that have to be collected up front, such as prepaid interest, your taxes, homeowner's insurance. So all of these costs that I'm talking about right now are all lumped together in something called closing costs. So for this example, and keep in mind with my examples, I typically share higher than what I normally see. I do that on purpose because I'd rather have the numbers be more expensive here than when we get to a real live scenario and then they're actually better or lower than what we have here. Because it's always better when they're cheaper, because I don't want to be the guy that's like, oh yeah, they're only going to be 12 grand, and then when we get to the closing table, they're like 15. Just know I overestimate it. This is based on a very standard, like 600 credit score individual. Going off on a tangent again here. But anyway, 14 grand plus $12,000 in closing costs. Now we're talking a total of $26,000 is what you would need for an FHA loan to buy this $400,000 house. You're like, what the hell, Braden? You were just telling me I could buy a house with like 2 grand or 3 grand or 500 or 0. So how do we do that? Here's how we do it. Utilizing down payment assistance. Now keep in mind, depending on the program, you're gonna get a percentage. Sometimes the percentage is based off of the total price of the home, but in most cases it's based off of the total loan amount. So in this scenario, I'm going to use the loan amount one. I'm going to use a program that gives 4% assistance because I know it exists in every state that I do business in, and you only need a 600 credit score to do it. So I'm going to share that one. So the way this one works is we're going to take our, loan amount, which I probably should have done a little bit more homework. This won't be 100% accurate at this stage because the other thing, we take away the $14,000 from the $400K to get our loan amount, which would be $386,000. So I'm going to take 4% of that, which is $15,440. That's the down payment assistance. So 4% of the loan amount, we get this awesome down payment assistance, which will give us $15,440. It will actually be a touch higher than that because on FHA loans specifically, they also charge something called an FHA upfront mortgage insurance premium fee. Good God, why is all this stuff so hard to say? But basically it's an extra fee that gets tacked on to the loan. It's not an out-of-pocket, so it's not a closing cost. It's actually included in the loan amount. So your loan amount will actually be higher than that 386 because it's not just the 400 minus 14. It's a 386 plus that upfront mortgage insurance premium fee. I don't have that number right now and I didn't feel like getting it, but anyway, it'll be a touch higher. So just know these numbers will be better than what I'm looking at now. We take our $26,000 that we would have needed to close, but now we're getting $15,440, which brings it down to $10,560 is now what you need to close. So you're like, still, what the hell? Now we need almost $11,000. That's not 3, that's not 2. How do we get it down? Seller paid closing costs. If anyone tells you right now that sellers are not paying closing costs, you're working with the wrong real estate agent. I don't know how else to put it.
You're dumb.
The people that I work with every single day, we are getting seller paid closing costs on 99% of my transactions. The only time it's not happening is if the client doesn't need it and we don't need to ask for it. But I usually ask for it anyway because there's a lot of fun stuff you can do. We'll get into that with another video on strategies, using money from the seller to buy down your interest rate and even pay for a future refinance, but that's a different video. Seller paid closing costs. This is where we have to negotiate a little. This is where having the right real estate agent really makes a difference. So do your research. If you're buying in a place where I'm doing the loan and I'm your loan officer, I'd be happy to connect you with real estate agents that I work with who I know how to negotiate seller paid closing costs. They do it all the time. And here's what you do. So in many cases, let's say that this house is offered at $400,000 and it's been on the market for 60 days, right? So it's been sitting for almost 2 months, no one's buying it. Your first instinct is to be like, well, maybe I can get it at a lower price. I want you to stop thinking like that if you don't have tons of money saved up. If you've got lots of extra cash, again, this is not for you. This is my down payment assistance broke people. Don't immediately think you can get a deal on that price because that may not be the best possible way to spend your money or to do this, to get the best possible payment or total out of pocket. So my recommendation, again, we're gonna talk with the realtor, figure out what a strong offer would be. In some cases, you can offer lower than the sales price and ask for the seller to cover your closing costs. But if there are concerns, they're not gonna drop it any further or anything like that, I still like to negotiate those closing costs. Because here, in perfect example, if we could get the seller to cover $10,560 worth of your closing costs, well, that's pretty easy math. Now you'd need no money for closing. If you got them to cover $9,000 worth of your closing costs, you would need $560. So, you see where I'm going with this. We can play with this number all day long, and this is why it's great to have these consultations with clients and to have a savvy loan officer that knows what your specific goals are. If you tell me you've only got $3,000 to work with, that's a really easy calculation. We need $10,560, but you only have $3,000. So we're gonna take our $3,000 out of that number. The difference would be $7,560 is what we would need to ask for in seller paid closing costs. So that's a perfect example. You tell me you need $3,000, we do the math, okay. In order to get this house with $3,000 or less out of pocket, we're gonna need at least $7,560 in seller paid concessions. Now I wanna go into a couple of things because there are only a certain amount of concessions. Concessions means that the seller is paying for your closing costs. It's coming out of their end. Let's just keep the same example, $400,000. We have a $400,000 sales price. The seller of that house is going to make the difference of whatever they owe on their mortgage. So if they owe $100,000 left on their mortgage and they're selling it to you for $400K, they're gonna make $300,000. Minus real estate commissions and fees and stuff. And if they pay closing costs, if they're gonna pay your closing costs, that total bottom line, it just gets moved over to your side to cover your cost to bring your total dollar amount even lower. So that's how it all works. That's kind of the gist of the formula, and we can plug literally anything into this. This works for FHA loans, like we just mentioned with the 3.5% down payment. It also works with conventional loans. Did you know as a first-time home buyer, you only need 3% down on a conventional home loan? That's hardly anything. That's less than the FHA loan. So that just makes these numbers even better. Perfect example with the new Arizona is Home program that's out there in Arizona. A 3% down payment for a conventional loan. If you've got solid credit like 720 plus, you do a super low down payment, 3%. We get 4% down payment assistance. Now you've got an entire 1% to go towards closing costs, and we can ask the seller to cover the rest if you truly don't have it. But keep in mind, there are limitations on how much the seller can pay depending on the type of loan that you're getting. For conventional loans, they typically can only give up to 3% of the total loan amount, unless you're putting a larger down payment. If you're putting a larger down payment down, like 10% or higher, they can contribute a little bit more. So the calculation's a little bit different. You can always talk with your loan officer first and your real estate agent. But for FHA, they will give up to 6% of the purchase price is allowed to be covered by the seller. So I mean, that's a chunk of change. Let's do the math for 400 right now. So at 400,000, 6%, that's $24,000. Like again, is the seller going to contribute $24,000? Maybe. I've seen it happen. I actually have had a seller go to the full 6% at like a $450 sales price. So just know it's out there and it can happen. If they don't have any extra money to maybe make repairs, or maybe something happened and they don't want to lower the sales price, concessions can be awesome because not only can we use that money to help lower the total amount that you have to bring to the table, it's actual money that you're spending to buy a house, we can also use it to buy down the interest rate. We can also use it to do a temporary buy down, and something called a 2-1 buy down. Other videos on that one too, other videos. I'm not gonna get into it today. So just know that this formula or this idea is how we do it, and you can do it with everything. You can actually do it with USDA and VA. So let me erase this real fast. So let's get into it again using VA or USDA. So VA and USDA are both zero down loans. You do not need a down payment. However, you still have closing costs. So if you don't have the money saved up for the closing costs, or let's say we are in a market where the sellers are just not willing to pay for closing costs. It's a seller's market again, and everyone wants a house. Remember those times? They had them a few years ago. You don't have enough money for your closing costs. Sellers aren't willing to pay them. We can use down payment assistance to help you too. So here you go. We've got a zero down payment, but we still got closing costs of around, let's just call it 12 grand. $12,000 is not a small amount of money. That's a chunk of change, especially for our veterans, or for the USDA. That's a very rural area where you actually can't make up to a certain dollar amount to even qualify for these loans. So when money's tight, 12 grand is a lot. Let's use down payment assistance. The cool thing is this one works because either it's loan amount or purchase price, it's the same, because the loan amount and the purchase price is the same because you're not doing a down payment. So let's take our $400,000 and let's just even do a 3% down payment assistance program. So if we got 3% assistance, anyone guess what 3% of $400,000 is? It's 12 grand. What are our closing costs? 12 grand. How about that? Guess what? Now you don't have a down payment. Now you don't have to pay closing costs, and you didn't have to negotiate anything on the seller side of things. So you can give them exactly what they're asking for, full price offer. Don't mess with negotiations, unless there's 5 or 6 other people wanting that house. But again, this is another strategy to do that. It works with every single type of loan in every state that I do business in. So that's the basic strategy. And if you're concerned about credit, because 2 areas that I see the most problems in, or the reason why most people aren't willing to apply, or the most reasons that they get declined, is either lack of assets, lack of money, or lack of credit. Now, you have to have one of the two in these scenarios. If your credit is really, really, really bad, you're probably gonna need some money for a larger down payment, but there are loan options for you. If your credit's really, really good, but you have no money, we just talked about down payment assistance. If your credit is really bad and you have no money, that's okay too. Your credit may not be as bad as you think, or it might be worse than you think. I have no idea. I've seen all spectrums of it. I have an in-house credit repair specialist guy, but I've seen this guy take people that were maybe in like a 580, 570, 550, mid 500s, right? We need a 600 to qualify for down payment assistance. They're good in every other aspect except for the credit piece. Well, this guy will find a way to get your score to whatever it needs to be so that we can use that down payment assistance. You're probably gonna have to do some things. You may have to pay off some debt. It may take some time. You may just have to let things fall off. In some cases, it's a quick fix. We had one the other day where it was literally a quick delete of an item. There was a negative item on this person's credit report because their dad had the same name as them. It was a junior senior sort of thing. And he's like, no, that's my dad's debt. I don't know why it's showing on mine. The credit repair specialist, he just had him send a letter showing that it showed the senior instead of the junior. We submitted it to the credit bureau. It got deleted in 3 days and boosted this dude's score up by 40 points. And guess what? He's out shopping for homes this weekend. That could be you. Stop sitting around, stop waiting for someone to come save you and your credit to magically get better. It's okay to ask for help. That's what me and my team are here to do. So if you've got little money or bad credit, I'm your guy. Let me help you. So it really is that simple. These numbers work with so many different scenarios. I've got down payment assistance programs starting with 600 credit scores. Other ones open up, the higher your score goes, the more options open up. Once again, if you don't have any money saved up for a down payment and you truly want to become a home buyer, now is your time, because home prices are just going to keep going up and up and up. If you can get in now, while the market's a little bit softer and not as many people are bidding against the homes because of interest rates, is a huge win for you, and the value is built in. I don't want to get into all of the details of what it does because I've got so many other videos that talk about that, but home ownership, you own it, you pay the mortgage balance down, it increases in equity, it's just a slam dunk home run type of an investment. If we're talking that you can spend as little as $500, $1,000 out of pocket to buy a house for something that's going to be worth $100,000 more in a few years' time, that's a really smart investment to me. But give me a call today. Check out my website. There's a quick inquiry you can fill out if you want to learn more about this, or you can schedule an appointment. Or if you're ready to straight up take a loan application, you can do that too. So be sure to check it out. If you have any other questions, just hit me up and I'd be happy to help.